It is Tuesday, February 25th. We're 2.5 hours into trading, and the market is continuing to sell off. You can see here that we had this big breakdown yesterday with a close near the low of the day, and we had follow through selling today. But kind of figured this was going to happen after I saw yesterday's price action. I'll get into that a little bit later. First, I want to show you that yes, I have actually been short today. So I'm going to put the chat room up. We're going to go in. And you can see long puts here. That was an hour after the open. I bought the February 324 puts that expire on the 28th at $5.63. I'm in, I'm out. I made a 12% profit on that. I'm also going to put up my blog this morning. This is my free blog, www.oneoption.com. Anybody can see this information. Look at the title. New data suggests that coronavirus impact will be great. Don't buy this market bounce. Posted right on the opening bell as I do every day. So that's what's happening this morning, and I'm going to tell you why. Let's go into that 5-minute chart. Here you can see there was the opening gap higher. What happened? Instant selling. Instant. How did I know this was going to happen? So we've had these sell-offs on Friday because there are nervous jitters heading into the weekend about the coronavirus and what might possibly happen over the weekend. Then we've seen buying coming in Monday and Tuesday, and the market has rallied during the week. And then on Friday, we get these little sell-offs. Well, look what happened yesterday. Market sold off. What bounce? There is no bounce. And I was actually predicting, from my video yesterday, that the market would have a down day. And it did. We did see a little bit of a bounce, but then we closed near the low of the day. This is not the type of price action that we've seen in the last 3 weeks. That tells me that sellers are very persistent and they're keeping a lid on any type of bounce. So in the absence of any bounce on the close, I knew that today any kind of little move higher was going to be faded right away. And so we saw selling. This is where we bought puts in the chat room as soon as we took out the low of the day from yesterday. I knew that we were in trouble, and we took out support at SPY 320 with ease. I think we're going to see additional selling. The CDC came out and said that the United States should prepare for the coronavirus and that this looks like it's going to have a global reach. We've seen outbreaks in Italy. Austria is no longer allowing train travel to Italy between the two countries. We've seen a number of deaths in Iran. South Korea has about 1,000 new cases of coronavirus, so it is spreading and it's extremely difficult to detect. That's a really big part of the problem right now. So, apart from that, China has said, you know what, we've got it under control. People are going back to work. Don't worry about it. So, that's what the Chinese are saying. But here's what's actually happening. I was reading a lot of data points last night, and I learned that power generation and coal consumption for power plants is down 45% year over year. And this is in the month of February, and this reading was taken on February 20th. So only a week ago, actually a few days ago, very, very recently. They're also looking at the pollution in China. Pollution is way down, meaning that travel is way down. Pollution's down about 25%. According to a lot of traffic statistics that are recorded, only 25% of the traffic has resumed back to normal in China. Think about that. That is a huge, huge fall off in transportation. So we're seeing a number of signs like that. Apple came out and said that they're going to have supply chain disruptions. We know that not many workers have gone back. So the production lines are still down. There's a huge glut of steel right now in China, and many of the steel factories are thinking that they may have to shut down their blast furnaces. That is extremely expensive for them to do. So everything's coming to a grinding halt right now because of the coronavirus. You had MasterCard overnight said that they're not going to be providing 2020 guidance because of the virus. United Airlines said the same thing. They can't see what the impact might be, so they're not providing this guidance, they're not providing these numbers. So the market has completely discounted the coronavirus, and you can see here in the last 4 weeks that we've had this little bit of a sell-off, and then a rebound. Another sell-off on Friday, then a rebound. Then we actually made a new all-time high. Little sell-off, rebound, not this time. And so bullish speculators are getting flushed out. And after a huge market run-up like this, you can see that is a very long-term trend line right there that has been breached right around that 50-day moving average. So we've taken out support at SPY 330. We took out support at 327. We easily took out this support level at 320 today, and the market is continuing to drift lower. Personally, I believe that 316 is an easy target. That's the 100-day moving average on the SPY. If things got really, really nasty, you can take a look at this low here. You can take a look at this high here. If you calculate that distance, that's how much the market could possibly fall from this low, and that would actually put us down to the 200-day moving average at 304. This is about as bad as I think it could possibly get. Now, what we're looking at is short-term selling. Eventually, this sell-off is going to find support. And if this gets overheated and we start to see panic selling, eventually buyers are going to come in. Interest rates are at historic lows. Bond yields don't keep pace with inflation, so it generates negative real returns. That forces people to own equities. Sorry about that. So that forces people to own equities, and you're going to have a natural bid to the market. Plus, corporations are issuing stock and they are using the proceeds from those bond sales to repurchase shares. So there are fewer and fewer shares. About 50% of the shares have been retired in the last 10 years. So this is a very, very powerful force. There is a natural bid to the market right now. Coronavirus is going to run its course, but there's going to be some aftermath, and it's going to be greater than anybody originally anticipated. So if you're a swing trader, don't worry about catching this big market fall. Just make sure that you're out of the market, as I've been suggesting. Make sure that you're in cash, and I've been suggesting that all the way up in here before this decline. Okay, so now if you're in cash, you just wait from the sidelines and you don't even worry about what's going to be happening. You wait for those signs of support, and I will be telling you when it's time to get in and time to buy. Now, what we will be looking for is a big market drop and rally, 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 rally the whole day. And what that will result in is even more dramatic than this, but a bullish hammer with a long tail underneath touching a major moving average, maybe even the 200-day moving average. Could happen off the 100-day moving average, but a big drop. And then that bullish hammer is what we're looking for. When we get that, we should see 2, 3, 4, 5 days of really nice sustained buying. Now that is a swing trade that we can get behind. If it happens really soon in the next week or two, then I'd be a little bit suspicious of it, and I'd say let's take profits after 3 or 4 days off of that bounce, because we're probably going to get an aftershock and another leg lower. I think this whole coronavirus episode is going to take perhaps even a quarter to play out right now, given the spread, the economic impact. I was also going to mention that we're starting to hear from the Port Authority in Los Angeles that shipments are down 25% from China. So they're just starting to see the impact of it. So it's going to get a little bit nasty. And long-term investors, no need to worry. This is going to play out. But I'm talking about swing traders who have maybe a 1 month and in perspective. You need to be careful right in here. You need to be in cash, and you need to wait for the market to come in. Now, why not buy puts? Because when we get these snapback rallies, they're going to be violent. You're going to be in great shape. Everything's going to look great. You're going to come in 5 minutes later. The market's going to be up 50 S&P points. You'll go, what the heck happened? Oh, the Fed just cut rates. And they'll do it in a snap like that. And they'll do it when they feel that they can impact the greatest number of shorts to force short covering. So those things happen. Believe me, I've been through them many, many times. So the better play is be patient. Wait for this to come in. Wait for the dust to settle. I'll know when those signs of support are there. Then we're going to come in and we are going to scoop some of these great, great values. And we'll be able to hang on to them for a week or 2 or 3. That's the play. not the short side right now. Now, if you're very, very nimble and you're a day trader and you're watching the market all day long as we are, you betcha there's good opportunities on the short side. And we are going to be nailing them just like we have been. I am short Apple. I highlighted Apple. I'm going to get into some shorts that I like today. And let's bring up that chart. And I'm going to go back to the 5-minute chart here on the SPY so that you can see what's happening. See, there it's starting to sell off. I started the video right in here and I said, I think we're going to be seeing some selling in here. So I'm looking for another leg lower. We'll keep that screen up and we'll take a look at some of the shorts that I like. EXPE, might as well stay on this chart. I like this as a short. This is a travel stock. You can see here, first of all, the big drop. This is before any coronavirus. Big drop down to $94. Well, it gradually recouped itself. Earnings here spikes up, hits resistance at the 200-day moving average, and now you're starting to see some pretty heavy selling. Well, the airlines have already said that they're starting to feel the impact. My God, who's going to go on a cruise right now? Nobody. So those stocks are also very, very weak. Well, who's going to be booking travel abroad? Nobody. EXPE is going to be hurting. You've got this breakdown below the 50-day moving average right now. You have this horizontal was resistance, now it's support that was breached. You have this long red candle, which is an engulfing pattern, also very, very bearish. So 200-day moving average couldn't get through. Big drop, gap down, below horizontal support. Big red candle, also below the 50-day moving average, also breaching this upward sloping trend line. I think EXPE, Expedia. I think it's a good short for today. I think it's a good short overnight in this new format. I'm trying to give you good day trades that will work in the afternoon. I'm trying to give you day trades that you can possibly hold overnight. And I'm trying to give you trades that even should perform well tomorrow morning if you're watching this later on in the day. So let's go into that 5-minute chart. There you can see steady, steady selling making a new low of the day. So that is a short that I like. Apple, I had mentioned earlier. In fact, if you watch my video this weekend, you know I thought Apple was a good short. It has relative weakness. Let's put that 1 OSI indicator up. This is going to show us weakness relative to the market. Right now it's had this big spike up here, had a nice little rally, but earlier it was super weak. So watch for Apple to start to soften in here, and let's go into that daily chart and see what's happening with it. Now on a daily basis, you can see that relative weakness, relative versus the market. That is one of the huge advantages and the edges that we trade in option stalker. So you've got this big drop. You have the 50-day moving average that was breached. I believe Apple has an easy path down to this 100-day moving average. Let me also show you something else. Apple's probably one of the most widely held stocks by retail investors. And after you get a massive, massive run up like this, almost parabolic stock price movement, if you're looking at your portfolio, you're going to be inclined to take gains on your stocks that have had the biggest winnings. So I think that's another thing that you're seeing in here is retail investors are getting out. Apple warned they're going to miss their revenues. They've got supply chain issues. They had to close their Apple stores. Those sales were down 20%. Also, the analysts who looked at this Apple's earnings report here, I remember them saying that that service sector, the revenues did not grow as fast as they'd like. They were looking for 20% revenue growth, and I think they came in around 17% growth rate. So there are some fundamental issues with Apple, even apart from the coronavirus. They're also working on a higher end phone model. If the coronavirus does have a global economic impact, people may not be willing to spend money for this big new phone that they're going to be releasing. So that might be an untimely release. I think Apple's a good short. I think you can see it down at least to this 100-day moving average, perhaps even farther. So I think it works this afternoon. I think it works this evening. ADSK, let's take a look at that. You can see another parabolic stock. It's gone from $140 to $210. That is a 50% increase since October. You've got this big, big, big upward sloping trend line. Long red candles closing on their low, big gaps down below the 50-day moving average. Put up that 5-minute chart, see what it's doing. Big sell off, tiny bounce, getting ready to roll over and keep going lower below the prior day's low. And let's see what we've got for relative weakness on this one. And you can see how it's starting to drop back below that zero line, showing relative weakness. ADSK works on a short basis today, tonight, probably tomorrow. MA, MasterCard, another short. You've got, again, a upward sloping trend line breach. You've got it below the 50-day moving average. MasterCard, another company that said, we don't know how to get a handle on what coronavirus is going to mean. We only know that economic activity is down. So MA, I think, is another good short. Take a look at that 5-minute chart. And there you can see a steady drip lower. Let me also show you this, and there's your relative weakness. We'll put that SPY overlay up. This is the S&P 500. You see that bounce in the gray line? Look what MA did. Nothing. Flat line. Couldn't even get off the deck. The next wave of selling down, this stock is going to continue to go lower. So very weak relative to the market. Okay, so what happens if the market does happen to bounce? What are we going to do then? I would keep my long positions to a minimum. If you are a day trader and you see a market bottom, there's a chance for you to come in and play a little bounce. I think ZM is a good stock to do that with, but you can see it's pretty choppy in here. Put up the daily chart. You can see how it's been rallying higher. It is unfazed by all of the market selling, and there's your relative strength. So ZM probably going to be a nice stock to play on any bounce and any pullback in here with the market. Market pulls back, finds support, stock pulls back to the low of the day. You can buy it, probably get a little bit of a release, a little bit of a bounce. I like it. Another stock with relative strength that was a nice short was Microsoft. This stock is actually a stallion. You can see the relative strength and the bounce off of the 50-day moving average here. Microsoft did not go quite parabolic like Apple did, so it's a nice steady grinder. I think it does pretty well in here. Out of the mega cap tech stocks, I think Microsoft is probably one of the stronger ones. So I do like it in here. It's showing some pretty good strength. HPQ announced earnings overnight. I don't like it long term, but I do like this breakout right in here. It's been able to hold the gains from earlier today. Let's take a look at that 5-minute chart. And you can see market's been down all day. Stock has been able to hold its gains and hover near the high. So I think on any kind of market bounce, HPQ might be a nice play on the upside. And it is trying to break out to a new all-time high. Very, very steady stock. Has not gotten way ahead of itself. Also, decent play. HD announced earnings. We do have earnings searches. That's how these plays are coming to my attention. And we're going to the 5-minute chart. It's still up for the day, so it's still holding its own. However, it doesn't have the strength that HPQ did, and it has that resistance level right here at the all-time high. So not my favorite. CLX I showed you yesterday. I think that stock will continue to perform well. That is a nice long. Look at that breakout right in there. Starting to pull back a little bit right now. The play here is that everyone's going to need disinfectant if the coronavirus continues to spread. Clorox obviously makes bleach. It's a great disinfectant. I hope you like this new format. I'm trying to do the video about 3 hours after the open or so. This gives you ample time to take advantage of these trades in afternoon hours before the market closes. And if you choose to, you can hang on to these overnight. I still think they'll perform well overnight, especially on the short side today, folks. I think the market is going to test that 100-day moving average at SPY 316. So that was my intent. If you watch the video after the close today, you'll have some really nice stocks to take a look at the next morning when the market opens that you might consider for a short position. Or if we're getting a really nice bounce out of the market, you'll know the longs that you should also be taking a look at. I used Option Stalker throughout this video. Please come to the website. You can take the free trial there. If you like the content, please give it a thumbs up and make sure that you subscribe to the channel and turn on your notifications because I post these videos every day. I promise you it'll have great educational content and actionable trade ideas. Thank you. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.